world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Fiona Mackenzie. Fiona is CEO and founder of Marble, a personal financial management app. Fiona has spent most of her career as an actuary in insurance and pensions, and is looking to bridge the gap between what people are doing with their money and what they could be doing to better achieve their goals. What do you think of the personal financial management tools you've used? What will the future of this space look like? Let us know on Twitter, @Rebank Podcast, or via Facebook. Got ideas for the show? Email us at rebank@bankingthefuture.com. Thank you very much for joining us today. Please welcome Fiona Mackenzie. Fiona, welcome to Rebank.
Thank you so much, Will. Very excited to be here.
Tell us about Marble.
So Marble is in user testing at the moment. We're in our kind of final phase of development. We're soft launching next year, and we want to essentially bring easy, accessible, exciting financial guidance and advice to UK consumers. So people who don't currently access advice, or maybe on occasion will think about maybe I should go and see a mortgage advisor, or I should go and look at my pension. We would very much like to sort of handhold people through that process of building a really exciting financial plan, helping them with short-term budgeting, short-term behaviours that you change so that in the long term you can achieve your financial goals. So that's where we are. Very excited, obviously, to talk to you today.
Yeah, great. Yeah. So terminology preferences aside, and different people have different preferences, but I think, broadly speaking, it sounds like Marble falls squarely within what's thought of as the personal financial management space, the PFM space, which was kind of initially created perhaps by Mint in the US. I think they probably launched 2007 time. Interestingly, as a Mint user, a long-time Mint user, they haven't really done that much
that's
over the past 10 years, which is kind of interesting, but maybe a topic for another day. But over the past few years, maybe two years, maybe precisely, in Europe, it's become a topic of renewed interest as PSD2 was passed and is now poised to come into effect in January, and as artificial intelligence is getting more powerful, and people are looking to apply some of the predictive strength of artificial intelligence to personal financial management. So, in your view, I mean, what's the state of the industry?
It's fascinating. When we started this, we looked to see if there was anything comparable out there, and certainly we looked to the US. So Mint was one of the very, very first examples. I had a colleague who used Mint when he was in the US, and there were a number of other kind of fairly fragmented, varying stages of technology, financial advice, financial guidance, planning, budgeting, capital investment, robo-investor things. It was quite disparate even in the US market, which was a bit more mature. So we thought even sort of against that, I think we could develop something that's really, really exciting. I think over the time that we've been developing Marble, there have been a number of in the UK. There have been a number of a little like Mint, where you would use you'd pass your login credentials to a front end, and they will go and collect your banking information, and they will give you insights on your spending. So they'll go and kind of scrape your banking information, give you some interesting stuff about what you're doing with your money, maybe allow you to set kind of short-term savings goals. And I guess the view is that once open banking goes live, that you'll be able to sort of link that direct to your current account information. So I think that was quite exciting for us, and I think that was something that we looked at as a bit of a foundation for bringing people into Marble. But there's still very little out there in kind of long-term savings. I mean, my background is in insurance and pensions, so I'm very excited about the fact that people are now automatically enrolled into pensions. But that means now people have quite a complicated financial product with investment decisions that they don't necessarily understand, that they don't necessarily want to go and get advice on. And I think what we'll probably see is that increasingly existing incumbent advice firms, so traditional kind of IFAs, will build online capacity. So you'll be able to access some of their services online. I think there's a lot of chatbot activity going on. There's some really good stuff about, you could transfer this much from your bank account to your savings account. I think that's quite exciting as well. But there's still a huge amount of that real, true financial advice, which is about which mortgage should you have, how much money should you put in your ISA, do you have a risk appetite that would indicate that actually you can put some money in shares for the next year and a half, or actually is it for you something about sort of long-term investment with a view to retiring early, or changing career later, or whatever. So I think there's a lot more room for new entrants. It'd be lovely to have some more competition, I'm sure, because we can obviously learn from our competitors. I think we certainly sort of talk to each other about how we're doing things. One of the huge challenges for the industry is open banking is wonderful for a component of that data feed, but in general, insurance, pensions, if you have a final salary pension scheme or you have a life insurance product, the connectivity of that data just doesn't exist yet, and there isn't. There's lots of talk of what's called the pensions dashboard, which should launch in the next few years. That at the moment I believe is not going to be open to advisors, so we're not going to be able to access that data as an advice firm, and so you're not yet going to be at the stage where you can collate all of your financial information. So some of your banking information you'll be able to get, credit card information hopefully will be eventually linked in, but there's still going to be a huge sort of huge range of financial products that we're not going to be able to directly link to without someone like us, like Marble, going and doing a lot of kind of back work to link up to systems. So actually, I think that might actually be an opportunity for someone if they wanted to start going in and working with insurers to really build exciting kind of data links, so that you could have that same ability to say, okay, what's actually in my pension? Can I go and just take that information and then consolidate it with my other data on financial products more easily?
Wow, okay. So lots to get into.
Sorry.
No. First question, just to, I suppose, fully understand the model. Are you guys a regulated financial advice firm?
We are not yet. We are not yet regulated. We will be in the future. That's very much our aim. We've been working with the FCA for actually just over a year, but I think we're looking ahead to be regulated next year. Mm-hmm. What we're finding, though, is a lot of what people actually want from us is not regulated activity. It's something that kind of sits before that. But it's really important to us that we're eventually able to offer proper regulated financial advice later on.
Yeah. So maybe you just define for the listeners, where's the line between what you can do without regulation and then what requires a license?
I will recognise the FCA might hear this, so I'll try and be as precise as possible. So if you tell somebody you should invest in a Barclays ISA, and within that ISA you should invest in shares in Barclays, that would be financial advice. It's a specific product, it's a specific investment recommendation, and if you take into account their personal circumstances in doing that, that is advice. So that is that in the advice boundary. But there's an awful lot you can do before that about, this is an ISA, this is what would happen if you invested your money in an ISA. You can direct people to places that they can then find ISAs which they may want to consider. But once you start recommending a particular product, a particular investment, and also in the light of their personal circumstances.
Okay, presumably there's a fair amount of space between this is what an ISA is and you should invest in a Barclays ISA these underlying assets. What about something like asset allocation? You should put 40% of your wealth in equity. So
I'm not sure if the FCA have actually directly said this, so I might be a little bit careful, but I think you can talk about generic asset allocation questions, but you're beginning to get close to that advice boundary, and I think very much the challenge for firms like us is to make sure that if the consumer perceives what we're doing as advice, and a complaint goes to the ombudsman will treat it as though that consumer has had advice. So I think as you begin to skirt closer, there are definitely things you can do about asset allocation questions. But if your user thinks that they've actually got financial advice, then to all intents and purposes, their complaint will later be treated as though it is. So yes, so you're probably not, I think, doing regulated activity then. But I guess there is opportunity for that just to be a little bit difficult.
Mm-hmm. So, I've been roundly underwhelmed with propositions currently in the market.
Good.
I think that for a U.S. only customer, Mint is great. Apart from any concerns around screen scraping, leave those to one side. But it's it connects to pretty much all your accounts. It pulls stuff through pretty well. It automatically tags transactions, budgets, things like that. Great. Now, maybe I'm an edge case. I don't know. I would think increasingly less so as the world kind of globalizes. American living in the UK. I have a UK bank account.
Yep.
I have a sterling balance in that account. If I have £1,000 in my account, and compliments to Mint, they've managed to link my UK account. Great. So pulls that through, throws a $ in front of it instead of a £. Now I have $1,000 in my UK account, which gets summed to all my dollar balances on Mint. I mean, really? How difficult is it to just pick up an alternate currency and do a real-time exchange?
Well, I think we can maybe talk a little later about making sure that your target market, the people that you test with, represent your target market. But one of the happy things about the current situation in fintech in the UK is that we have lots of the people who are helping us build this are from the EU, and so they have this very problem where they have some of their money is in euros. I think in some of it is actually in all sorts of different currencies, and that's very much one of the things they want to put to us, is that if you just have this in pounds, it's not actually that helpful. If you can only cope with a single currency, then it's not really helpful,
and not even convert it. I mean, wow, 10 years on. Anyway.
But I mean, I think the wonderful thing about things like Mint is that we can learn from that. We can learn from the fact that you are still a loyal customer of Mint, despite the fact that you think it's got failings, you are still happy to use it. And I think that's a real testament to the fact that obviously this is a market that people are not yet sort of throwing themselves at, so there's not lots of other competition out there which is trying to do what Mint does but better. But B, they do a good service, like they do a good job, even though there's obviously some recognised failings.
Yeah, and I guess one of the tricks too, and again this may fall into the category of an edge case, but one of the most frustrating pieces of any platform of the type that we're describing is that. So you have to link all your accounts, which is great. If you bank with one bank and maybe have a mortgage or a credit card with one other bank and they're mainstream high street banks in your country, great. Now that may be the majority of people, I'm not sure. Yeah. But if you get 80% of your banks and 80% of your cards and 80% of your investments linked to the PFM and 20% you just can't link, then it basically fails in 100% of the job, which is to show you your comprehensive situation and allow you to make informed decisions about it.
That is a huge problem. And so one of the things, and I probably want to throw this out there because I think other people can do this, is there are ways of linking people's account data in a sort of clunky and slightly less technologically advanced way. You can use the My Data download that standard that was launched a few years ago. That is one way you can get account information in. But it's a problem that we particularly have because we're not just looking at banking information, we're not just looking at people's savings and current accounts and credit cards, we're looking at people's, like, what's your life insurance policy, what about that workplace pension that you had 5 years ago, and there are links available to that, but it's not necessarily easy. I mean, I had great hopes for data availability when I started this, that there was lots of talk of this wonderful world of free data through APIs, and somebody did say to me that you might think that, but actually some of the time what you're talking about is somebody will send you an email with a spreadsheet attached to it, and so we are lightning years away from it seeming like that data is widely available. But I think what we recognise is that in our service we will have to do some legwork. So I think Pension Bee are probably a great example they look at pension consolidation. They go and do legwork, and I think that's very much part of what we would recognise is that you can have this wonderful front end that's really easy to use, interesting insights. But actually, for us, we will have to do some kind of traditional financial management in the background.
No, that's a great point because I guess so much of like the thinking now and new business models coming out, especially in fintech, is about moving from wholly manual processes to wholly automated processes. But in some cases, perhaps the low hanging fruit, I guess that is very possible. But in some of the more complex, potentially more profitable, potentially more core areas, that's just not possible, i.e. the technology isn't there, the automation isn't there, that the data availability, as you're saying, isn't there. you kind of have to consciously build in a manual component, be happy building in a manual component, finding a way of making that commercially viable, i.e. charge for that commercial component.
Yep.
Maybe on the subject of charging, I mean, it seems like one of the biggest challenges with things like PFMs is that customers often expect free apps and free access to music and free whatever else it is, and therefore free PFM type service.
Absolutely.
Now, it's complicated to deliver. You require a license and regulatory burden, costs associated with that. If we're talking about manual components of the workflow as well, that's not cheap. So how do you deliver that in a cost-effective way?
I mean, I think I'd probably say that Marble we are currently working through our kind of strategy for how we'll make money. I think you have to pick your principles. So there is money to be made from selling your users' data, and so that is something that I know that a number of the kind of sort of short-term financial management apps do. That's something I think for us that we recognise that financial advice is perceived as very untrustworthy, so we don't want to do that. But that does rule out a revenue stream for us. There are lots of traditional ways that financial advisors make money, so upfront fees on many types of advice and many types of products. But they are often, I mean, when I did some mystery shopping at the beginning of developing Marble, people were asking me to give them £2,500 to move my pension across. So a fairly simple administrative task, but that was a huge sum of money. So we're not going to charge anything like that. I think that's fair to say. But upfront fees have lots of great things about them. They are clear, they're easy to understand, but you do then have a problem that actually it's probably true that the bulk of people don't want full financial advice every year, all year. So what you might actually, and I think probably what a number of people will do, is that you'll probably have perhaps lower fees for simple financial management. Maybe you'll get kind of referral fees, introduction fees from referring people to product providers. But it's so important to be upfront about it. And I think that's probably also why people are probably going down a lot of the employer route. So trying to get employers to offer this to their employees.
Oh no, that's an interesting point about distribution. Maybe we can come back to that. But I mean, it does kind of seem like, in terms of the B2C channel, freemium may be the best model, right? Like, provide some simple service to people for free, and then charge for the premium service, more comprehensive. Those people who are, one, getting value from the service, and two, interested in really going deep on what they're doing would, in many cases, be very happy to pay for it. Because even the referral fee piece, if you've got invest in this fund and we get a 50% revenue share, how objective are you at that point? And that's I think one of the long-standing concerns, complaints about investment advice.
I mean, I wouldn't, or obviously anyone listening to this, I wouldn't undersell that commission, so commission is very specific, that you get on some types of financial products. Commission can be very large. I mean, it can be a lot of money. And we have a real challenge that if we do use commission as a revenue stream, that how do we make sure that we don't end up designing systems, that we don't just end up optimizing for commission. And that is something that I know people who've set up traditional advice firms have had real issues with, in that they find that people just, because the nature of incentivization, will start giving advice based on that commission. So, I mean, I would acknowledge that there are huge challenges in getting people to pay for, I think, a full service every year. But I think, as you say, that freemium model could be quite exciting, and also it allows people to try our app. I mean, that's such a big thing, is that we're doing something that I think will be quite unfamiliar for people, and I think if they're allowed to sort of go through the journey and get something out of it, and then they can decide, well, do I want to kind of upscale this to something that's more formal. So yeah. Okay,
and then there's also the AI-driven chatbot model, which is has been very, very sexy over the past couple of years. I just fail to see the attraction of a chatbot that you text and say, "Can I go out to dinner tonight?" I mean, does that really solve my problem? That is, I mean, look, I appreciate the argument that, like, it's early days and it's you have to start somewhere, and it's going to get smarter and more sophisticated over time. Great, but firstly, I have fundamental concerns about whether chatbots are indeed the next wave of customer interaction, and two, wow, that just doesn't really solve a lot of problems.
Yeah. And I think, and it may solve problems where you are, you're just looking at your current account. It's about perhaps giving you kind of hints and tips to develop good savings behaviours. I can see a use for chatbots in kind of targeted outcomes for users of a service. I think I probably share your concern. I'm not sure that a chatbot in and of itself is an entire service, but it's something that we'll probably consider as a way of engaging with our users. So, our users may not go in and refresh our dashboard every 2 days, but if we send them a little alert saying we can't help but notice that this might be happening, that might be a kind of user engagement piece. But it is interesting. I mean, chatbots are, I have used them for various kind of travel related things. They don't work terribly well, the ones that I've used for travel purposes, but it's quite exciting. It feels quite interesting, and I applaud people who are building them. So yeah, we'll guess we'll see in a couple of years' time where we get to.
So we talked about distribution and B2C, which is great because, well, from an ego standpoint, you like have your brand out there, you're doing publicity, people are like, oh yeah, I know Marble. And you get that little endorphin boost, but it's really costly, especially kind of at this point in the the fintech cycle. There are so many consumer fintech brands, so many companies competing for the very limited number of apps that people actually download and use. Just increasingly costly. You mentioned the concept of kind of pitching Marble to large employers, and using that as an acquisition channel. Employers who are interested in helping their employees achieve greater degrees of financial success.
Yeah, and there are government kind of tax incentives for employers to offer advice to their employees. I think we see that to some extent. For us to get scale, that's a brilliant way of doing that. People are already logged into a kind of auto enrollment pension now in almost all cases, so it's a great thing for us to be able to tag along with. There are all the other challenges that you get with that. The employers then have long lead times for decision making, and you have a myriad of systems that you need to link into. But I suspect that's probably the model that most personal finance type apps will at least try and explore, which is that you have a kind of consumer one which is more expensive, and then you offer a bit of a discounted rate to employers to try and get scale. But I do wonder if that direct to consumer model could work really well. I think in time, as people become more engaged with financial apps, it may be that it's possible to build scale just by doing direct.
Yeah. I'm sure it'll work for someone.
Well, yeah.
Or maybe two, three players.
Yeah.
But it's like potentially kind of what we've seen with like in the robo advisory space in the US, like Betterment and Wealth. Just raise huge, raise as much money as you can, and use it to try to get the brand out, and and try to get scale on a super low cost model, and either you kind of hit that inflection point and you're viable, or it never happens.
And I would say that those robo-advisors, the sort of investor ones, they are competing with existing incumbent investment houses, which are enormous. And I think that we're not necessarily competing with many people. There are sort of various bits of other people's services that we are perhaps overlapping with. But I do think that, particularly I think Nutmeg's example where they did spend pretty big on their advertising, certainly in the early stages of Marble, people really tried to say, you're going to have to spend so much getting customers that this can't be viable. It cannot be viable as a direct to consumer model. I think we're obviously going to explore both routes, but yeah, it's interesting to look at their example. We are not at the moment currently intending to raise an enormous sum of money which we're going to spend on customer acquisition, but who knows.
Would it be a white labeled product that you sell to a large employer?
We would consider. I think we would consider white labeling. I think there are, you have to make sure it's kind of right partners. But I think if we're going to go through employers, we'd probably want to keep our name on it, because one of the things we recognise is that people don't always have individual finances. So a lot of people have shared family finances. So if you're on the name a random employer, Marble white label, and then your partner is on the name a random other employer, Marble white label. It's not necessarily going to be clear to you that actually this is a service you can, and in fact it would be really beneficial if you use it together with your kind of finances pooled. So I think for us it would be good to kind of maintain some brand presence in that, even if it does have an employer's name at the top of it.
What about bank partnerships? Selling into an existing bank or investment manager or kind of boutique wealth management company.
Yeah, I think we're really excited about that, particularly from a sort of data acquisition perspective. I think that may solve many of the issues that we have with the kind of wider how do we get data on everyone's sort of mortgages. But in our user testing, that's one of the things we obviously wanted to pursue fairly early on in asking our users, is this the kind of thing that you would, if we offered this through your bank or insurance company, would it be something that you would be excited about using? And we did get a lot of feedback from people that if that was the case, they would be very uncertain of what it was telling them, that they'd be much less likely to trust it. And so I think we have to be mindful of that if we do go through that route, it needs to be with the right partner, and we need to make sure that we kind of maintain at least a perception that we are still the kind of trustworthy entity that we were even without that partnership. But I'm very open to discussions, and I think, as I say, it may be actually really beneficial for us in being able to link up to particularly insurance companies' back end systems, and that would be amazing.
So you and I connected through Innovate Finance and their Women in FinTech Power List, which they just published at the time of recording. I think they published it yesterday.
That's right.
So, firstly, congratulations on being included. I would love to get your views as a very successful woman in FinTech on kind of the state of the industry from that perspective.
So if I maybe just describe my background, I come from an insurance, pensions background. There are women in senior positions in insurance and pensions. There are fewer in those kind of perhaps what I'd call technical type roles, investment-y roles. But I guess I expected when I came across to FinTech it would be probably fairly similar in terms of the makeup of people. And then I went through a couple of conferences and I was like, there are no women here, and I've genuinely been in a room with like hundreds of people, and I could count on my fingers how many women there were in the room. And so I thought, this is strange, right? This is really strange. I guess if I was to sort of guess a cause, you have financial services, which has not got amazing representation of women, and then you have tech, which has also not got amazing representation of women, and presumably just the intersection of those, for whatever reason, women are not coming across. I'd love to be able to say that there's a sort of very easy, obvious reason for this. I think it's a whole range of attitudes, expectations, encouragements, whatever. But I can maybe just talk about what we did at Marble to get. So we have 66% or 66.7% of Marble are women, and the way that I did that was I literally wrote a list of the people that I wanted to come and work with me, who I thought would be great. It turned out that a number of them were women. I approached them. I said, would you like to go and work on this? And they said, that sounds wonderful. I mean, it was very, very easy. But I think that without that kind of link with someone who was already in FinTech, I'm not sure that they would have chosen FinTech as an opportunity. And what I'm not able to say is that there are lots of women out there that I know who are thinking about FinTech but perceive it as not for them. I'm not sure that that's the case, but I think it's just that if you don't know someone who's in FinTech already, then it can be very hard to make an entrance into this kind of new market. So I think it is incumbent on us as an industry, on us as employers, as people who are designing products for consumers, to make sure that we definitely represent women. So there's this huge pool of talent out there who are not currently working in FinTech. So there are lots of women out there who are not in FinTech, and that is a real great shame. So as companies, we can do that in our hiring practices. One of the early things I did with Marble was that I decided that I wanted to make it women-friendly in terms of employment practices. So so that I would be very accepting of the fact. We would make sure that if a woman needed let's just be honest, this is something that used to really annoy me when I was younger, that people would instantly talking about women in childcare. The reality is that so many couples, that if it's a man and a woman, the woman will do the bulk of the childcare. So that is the reality of where we are, I think, in society. So it was an early decision for me in Marble that I really wanted to be accepting of parents. So if you need to work kind of offset hours or reduced hours because you have childcare responsibilities, that was not going to be a barrier to working on Marble. And if I'm honest, it is a barrier to working in financial services in many roles. It's perceived as a real barrier if you need to work 4 days a week. That kind of rule you out for many roles. So I think that's something we can do as employers, is find women who you think might be good, approach them. Don't just rely on who turns up to your recruitment events. Make sure that your hiring practices, I guess, are accepting of the realities that many women have caring responsibilities. But then I think there's probably a much wider piece about encouraging women, from school age through that process. So, at the point that kids are essentially making decisions about what they're going to study at university, girls are already put off studying the kind of subjects that might lead to a career in finance or tech. And I think we can probably, as an industry, do more to engage with those. But it's so important. There are lots of women out there who could be working in fintech. I think it would just enhance our talent pool to go and find them. And I think we can do that as an industry. I don't think that's at all a difficult problem for us to go and solve.
So of the 67% women that you have on your team, is there any sort of distinction between jobs that women are doing and jobs that men are doing?
So no, this is a particular hobby horse of mine. So I'm very aware, right? I'm very, very aware that it sometimes feels quite uncomfortable for people to give men administrative tasks, and that can then play out that you'll be working in some capacity, and kind of oddly, like it's the woman who's always doing taking the minutes or chasing up the actions. And I think that kind of attitude, it appears in all sorts of places. So one of the things, I'm very happy for women to fit in with the traditional accepted roles that we do. So marketing, compliance, risk, human resources. At the moment we're all kind of sharing these responsibilities. But if a woman comes in and picks up one of those roles as we get bigger, I don't think that's a problem. But what I definitely don't want us to do, and if I'm honest, I do talk about regularly with the people that I work with, what I really don't want us to do is to start just making those implicit assumptions that, oh no, that's not for her, I think we'll give this to him instead. And it's so easy to do that. I see that so often, that people are not aware that they're making these kind of implicit decisions.
No, totally agree with you. And that's like the most powerful piece, and really the most fundamental piece. It's just not approaching decisions with any sort of an inherent bias or prejudice, right? So, I can accept the fact that in society, maybe it's for nature reasons, maybe it's for nurture reasons, but different people get attracted to different stuff and pursue different stuff, and then end up in the job market with different sets of skills. So, fine. And I think as a society, we can be ensuring that everyone has equal opportunity to pursue whatever it is that interests them, and we can support them in doing that.
Wonderful, yes.
I think what we've inherited from years and years and decades and generations of social expectations around roles and who's responsible for what and who's qualified for what is the current job market doesn't reflect an equal opportunity to have acquired skills and to express one's interests and one's skills in the job of one's choosing. So I think that's a social issue, a societal issue that will take years and years to solve, and that we should be working actively and very aggressively to solve now. Yeah. I think what we can be doing immediately, and what you're saying, is simply not approaching delegation of tasks with any sort of inherent bias, right? Like, why would we ever do that? Like, it just doesn't make any rational sense to do.
Well, no, but if you, I'm a kind of keen observer of this kind of behaviour in the workplace. What you'll find is that people are not aware that they're doing it, and that's why it essentially falls under this unconscious bias thing. And I watch it happening. I watch women trying to make technical contributions, and just they're ignored because it's a woman who said it, so it can't have been relevant. And it's so sad to see that happening, because you know that none of the parties actually know what's happening. They don't know they're doing it. So one of the things I did before I came here was where I looked to see if there was anything out there that was kind of relevant that you could have a look at to explain this in more detail. So Google have some great stuff on their website, their Rework website, on unconscious bias, and it goes across not just kind of male and female, but it looks at race, it looks at class, it looks at sexuality, it looks at all sorts of things that might cause people to behave differently to the people that they work with. And it's fascinating because, I am pretty feminist. I talk about this stuff a lot. I talk about it a lot with the people I work with because I think it's a real issue. But even then, I sometimes catch myself doing kind of implicit assumptions, and I have to sort of think, whoa, come on, hold on. So, it happens to everyone. Being slightly sexist is not a sign that you're a bad person, but I think we all need to acknowledge that we're all a little bit prone to making these unconscious decisions, these easy decisions. And unless we keep talking about it, it will take years, as you say, but unless we keep talking about it, it's not going to get any better.
Well, that's a good point, I suppose. Like with so many things, acknowledgement, recognition is the first step, and once we're there, then we can start to make meaningful progress.
Yeah, definitely. But it's something that's very difficult to address. I've tried various ways of addressing this with people because it's something that I see, particularly as I get older. I sort of notice it more and more. It is very difficult to bring it up with people without them feeling like they need to be defensive because you're saying that I'm a sexist. This is terrible.
And importantly, and society says that sexism is wrong, right?
Yes,
it's stigmatized.
Yes, we have reached the point where if you are sexist, you are a bad person, and I am not a bad person, therefore I can't be sexist. And that's a real kind of mental gymnastic that someone has to do when you say this. So that's why I think it's important for me to recognise that I suffer from all sorts of implicit biases, which I'm slowly unpicking. But if you give people that feedback, it can cause them to feel really quite defensive, quite upset, which may be beneficial in the wrong way. But I think the best thing that you can do is actually talk about the general kind of experiences of women. So it's difficult for women to say things in meetings without being interrupted. It's difficult for women to make technical contributions with and have them acknowledged. It's difficult for women to avoid taking the minutes. These kind of things are so common. They happen across workplaces, across industries, and I think the more that we talk about how those play out, the more people can say, oh gosh, okay, I definitely don't want to do that. Rather than, I think, sort of picking on every individual and pointing out where they are making perhaps errors.
So this is actually a very fortuitous, I would suggest, point of transition back to Marble and the actual business. And I can tell you're curious as to how I'm going to make this leap. But as someone with an investments background myself, when I hear terms like subconscious biases, I immediately think of investing. Mm-hmm. And one of the biggest challenges when it comes to making good financial decisions is acting with biases that often we don't recognize. So when it comes to risk versus return expectations, and I don't know, for instance, take Bitcoin as a great example now, right?
Yeah.
You look at Bitcoin over the past X number of months, and it's just been up and to the right.
Yep.
So why wouldn't you put all of your wealth in Bitcoin?
Well.
Like, why? Firstly, I'm sure both of us can come up with 100 reasons why you wouldn't do that. But unless you approach it with intellectual rigor and, broadly speaking, a background in kind of an understanding of the way the financial markets, asset prices work, supply and demand, it can be very easy to make bad decisions. You mentioned right before we started recording how important it is for a platform like Marble to appreciate differences between a male user and a female user. And often platforms, PFMs and indeed a lot of other automated online platforms maybe don't think about that in great detail, don't distinguish. So will you repeat that point that you mentioned to me before we started recording in the example you gave?
I think, I'm very happy to. So just to be clear, we're going to give our male and female users the same user experience, but we are also going to recognise that for women in particular, there are particular societal pressures. So the pressure to take career breaks, and obviously the wonderful choice of taking a career break, which affects your ability to earn in that period, and it also affects your ability. The exciting thing about the pay gap is not just that it affects your pay, it affects your pension. So you can end up when you retire of having a much lower pension because you've had a career gap, because you have lower pay on average. That's a big thing for us, and I think we will definitely offer people the opportunity to explore, how that works. One of the things I think we might want to think about is there's some interesting research we were looking at in a piece we did on the pay gap, which is from Mercer, where they looked at women's attitude to investment decisions, and what they found is that women were less confident about making sort of assertive, aggressive, risky investment decisions, which had a compounding effect, literally compounding effect on their pension savings. And I think that's something that we can definitely offer, is identifying that there are societal pressures that men should feel comfortable with investing, should feel confident about talking about it, and women should kind of avoid it. I am reluctant to build a service that sort of enforces. I think that's one of the things that's really important not to do, is to not enforce those societal pressures. So we're not going to make sure that our female users get to talk about the family section first. I don't think that's fair. But I think it's really important for us. The most important thing for us is to have as many women as are representative of our target market in our user tester group. And so what's been absolutely fascinating is we have done some user testing. Every single robo-advice, robo-investor, every single platform out there asks their users, what's your name and how much is your income? And so instantaneously, if you're a woman on a career break, or indeed a man on parental leave, you have not got your own income anymore. You are shared family income. And so what do you put in that box, and also what should I put my husband's income or my old income? And so for us that was fascinating, because we assume we just approach this from that's what you ask people, and it's a wonderful way to go through it. So I think it is so important. There've been a whole range of findings through that process that I think we will probably actually publish at some stage on our site, because I think they can, across the industry, I think they could be really helpful in things that if you are a man in your 30s who doesn't have a family and you have a great income, your line of thinking may be very different from a woman who is on part-time wage and who is doing childcare off to one side. And I think it's so important to kind of make sure that those full range of views are reflected in what you build. One of the happy things about Marble is that more than 50% of our user group are women, and that's, I mean, if I'm honest, that's just because they see me and they go, it's a women thing. That's wonderful. So I'm very, very excited about that. But I think we're mindful of the fact that it's not just about women and men. It's about age. It's about income. There's all sorts of things that we need to make sure are representative. But that was definitely one of the more powerful things, is that if we as financial services just design products that are specifically targeted at people like ourselves, it's very easy to miss the kind of needs and wants of the wider population.
Yeah, well, I think that's brilliant, and would love to read some of the more detailed information you guys have picked up through user testing. I hope you do publish that at some point. I mean, it's just, and it is interesting to think that what is your income is the first question that so many platforms ask. Firstly, it's a bit off-putting as a user, because you're like, I don't even know these people yet, and they want me to divulge one of the more sensitive pieces of information I have. And two, if we're approaching it from a point of how much money do you have, isn't that the wrong end of the stick? Shouldn't the first question be, what are your goals? Yeah. And you should work back from there.
Yeah, no, I mean, that is, those are essentially the first questions that we ask people. And we also then acknowledge that even that in and of itself for many people is, I don't know what my goals are, I kind of need help for this. I think that's absolutely right. And I think we view what we do is actually as much about a measuring of your current wealth situation as it is about, let's look at the future. Like, let's start to look at what your life could be like. What are the things you need to worry about? When I was in my 20s, if I looked ahead to my future, it was just, I didn't really know.
Just assume you'll be a millionaire, right?
Well,
you won't have to worry about any of this stuff. It was
kind of, there were some steps, and then it would be success, and it would be fabulous and vague something.
And assume that millionaires don't have financial problems.
That's correct. Well, they could start a startup and then have significantly fewer millions.
Was that the best way to earn $10 million? Is to start with $100 million and then start a company or something?
So I agree, and I think as I get older, I start to recognise that there are existing financial products out there which are actually really useful for people, but they are opaque. They are provided by disparate providers who may or may not be easily accessible to you, and I think we can just really kind of help people through that process. And a lot of it is about education. A lot of it is just even just the basics of how do you tell how much money this thing is costing you, and like what exactly is a compounding return, and if I put £1 in my pension now, is that like much better than doing it in 10 years? So I think that's our real focus, is that we want to have a long-term relationship with our users and really guide them through that process. And that to some extent is why we're doing lots and lots of rounds of user testing, because we find that people's responses, they range wildly. But people's responses to what we build are so important in what we go on to develop later.
Well, there you go. At the risk of making a really lame investments-related joke, if you get it right now, you have compounding results going forward.
Oh dear.
Fiona, what's the best way for people to find out more about Marble and connect with you directly?
I'm on Twitter. I'm very happy to talk about feminist matters on Twitter, on my own personal Twitter, Fiona Mac. We're also on Twitter, Your Marble, and then mymarble.co.uk is where you can find Marble. You can sign up. We will send you occasional updates, and we'll make sure that you're first to see Marble when we launch.
Great. Fiona Mackenzie, thank you very much for joining us today.
Thank you so much for having me, Will.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.